I am Lisa J. Stocks, and today we're going to be talking about Netflix, who just announced a stock split. We'll be talking about why companies do this, what this means for your money, and I'll also be sharing a position that I recently cut from my portfolio and where I reallocated those funds. So here are the headlines. Netflix announces 10-for-1 stock split. This will be effective as of November 14th, 2025 for shareholders as of that date. So, for example, if you own one share at $1,000 after the split, you'll own 10 shares at about 100. Still the same total value, just smaller pieces of the pie. So the split was announced yesterday. I'm filming this midday on Halloween, October 31st, and Netflix is up 3.72%, $1,129.54. Stock splits make sense for companies, making them more accessible to everyday investors, the retail investors like you and me, and for the employees of the company to receive stock options. So, before we get further into why companies have stock splits, let's zoom out on the performance. Year to date, up 49.23%. Over the last year, their highest share price was $1,341. They closed at $1,089 yesterday and are up $38.06 on the day as of the time that I'm recording. So now, when it comes to stock splits, there are three main reasons that companies do this. One, accessibility. $1,000 plus price tag for one share can intimidate some new investors. After the split, it'll bring it down to, like I said, about 100, which is a more comfortable price point that will resonate better with more investors. Liquidity. More shares means smoother trading. It's easier to buy or sell 10 shares at 100 than one share at 1,000. And number three, it's a confidence signal. A stock split often follows strong performance. We can reflect on a few companies that we've seen in the past go through this, like Nvidia, who also did a 10-for-1 back in 2024 and were up 150% in the next 12 months. But their AI dominance has a lot to do with that. Then we have Apple, who did a 4-for-1 split back in 2020 and then climbed 80% over the next 18 months. Tesla did a 3-for-1 split in 2022 and then had mixed results, but trading volume exploded. So a stock split is just cosmetic. It's just cutting it into more pieces, 10 slices of the pizza instead of just the whole pie. It's the same, just easier to share. Now, here's what usually happens when a stock split is announced. We're in the before stage when typically the share price moves up by 5 to 15%. The hype starts to build, options volume starts to increase. And then when we approach November 14th, when the stock split will be taking place, there'll be a brief period of volatility before the stock stabilizes again. After everything settles, the new investors can jump in, and we typically see an average of 8% increase in the following 30 days. But the stock split does nothing to add value to the shares. It primarily creates a lot of attention. So when it comes to Netflix, their long-term success depends on subscriber growth, ad tier adoption, their content strategy, definitely not how their shares are divided out. If you're not already, make sure you subscribe to the channel, give this video a thumbs up, hit that notification bell so you can keep up with all of my videos and live streams. And drop me some comments. Let me know. Do you already own Netflix? Do you plan on buying before or after the stock split? Or are you just not interested at all? Sticking to those ETFs. So we're almost to November. September is historically the worst performing month when it comes to the stock market. And one of the things that they attribute to that is that's the time of year when people make those changes to that portfolio. I seem to just be getting to that place now. I've been making some changes to my portfolio, adding in SPMO and FSPGX, for example. But I also decided to cut something from my portfolio that has been lagging for some time now. A little over a week ago, on October 22nd, I sold more than half of my Disney shares. On that particular day, I wasn't down by much, just about 2%. It's been a slow mover. I bought when the share price was high, started investing into it back in 2021, saw no growth, was receiving that dividend, but definitely a missed opportunity having any money sitting in that particular investment. The current share price of Disney is $112.24. The first time when I invested into it back on September 30th of 2021, the share price was $171.25. It spent a lot of time below $100 while I've been holding it, and zooming out to the past 5 years, it's down 7.41%. When it comes to streaming services, Disney remains unprofitable. The parks are dealing with pressures when it comes to costs. And so I finally let most of it go. I'll see if I can find a day when I'm actually in the green to cut the remaining shares that I have. After selling my Disney shares, I immediately moved that money into Netflix and more Nvidia. Nvidia's one of those positions that I definitely want more of. But because the funds came from selling those Disney shares, I figured I would move some of it to Netflix, an investment that over the last couple of years, I wish I had chosen instead of Disney. So now I have some Netflix in my portfolio, and I will give an update after the split. On the day, my Netflix is up 3.33%. Take the time to revisit your positions. Why are you holding certain investments in your portfolio? Are you aiming for growth, dividends? Reassess your choices. Balance those individual stocks if you decide to add them into your portfolio, along with those core ETFs like a VTI. Stay proactive when it comes to your portfolio. Make the moves that are going to have you on track. I will come back after November 14th with an update and keeping an eye long term on Netflix fundamentals. And when it comes to Netflix, let's take a look at some analyst ratings. Data today from Bernstein, they're rating it a buy with a price target of 1,390. JP Morgan Chase, a hold with a price target of 1,275. Jeffries, a buy with a price target of 1,500. Citibank, a hold with a price target of 1,280. And those are just from a few days ago. But overall, it has an average price target of $1,409.89 and a high of 1,600. That's it for today. Don't forget to like, subscribe, hit that notification bell. Leave me some comments. Check out my referral links. That will be in the description and pinned in the comments. And it is the end of Breast Cancer Awareness Month. Let's continue to carry the message forward. Early detection can save lives when it comes to breast cancer as well as ovarian cancer. So keep up with your screenings, understand your risk, and make sure you're sharing your family history so we can keep our doctors up to date. Thanks for watching. Okay, bye.